All right, hello everyone, and welcome back to the Daily Show again. So let's get started. All right, so for S&P 500, that's why you may have seen yesterday, actually went up to even a slightly higher high in comparison to the near consolidation region. So it does look like the momentum is still intact. So definitely, I would say that potential resistance will come likely against here when there's a potential rejection of a resistance. And next up will be around here, which is why I say in terms of profit target, if you have entered this trade, this is basically your first zone of target, whereby you take your profit, and then you will take your remainder trailing profit is clearly rejected from here. All right, so in terms of market structure, you get a high, a higher high, a low, a higher low. So market structure wise, you're looking towards bullish market structure, bullish trend, and normal in terms of the trend. So you get 50, 200, and 150 aligned at this moment. And then let's move on to the second one. But if you're looking at price action, just to highlight, you will see that even though there was a bearish engulfing candlestick, the reversal actually some sort of taken place. So, which is why a lot of times candlestick alone don't tell the whole picture. This is something that I've learned and acquired. So a lot of times, in fact, I will see that if you're looking at this particular candlestick itself, even though it's a bearish engulfing candlestick and by nature it's bearish, I would generally still lean towards the bullish momentum simply because the overall trend is still bullish. Price is very much above 200 simple moving average, and you're still forming higher highs and higher lows. So these are more conviction of the whole market structure is still leaning towards bullish. So a single candlestick like this bearish engulfing or even this red hammer candlestick does not have that much of a significance. On the other hand, on the upward trend, if you see this bullish engulfing candlestick or this bullish engulfing candlestick, these two add together, it's actually more significant because it shows that it's more likely to return back to the original trend, which is the upward trend. So that is something to take note of. All right, so that's the update for S&P 500. Otherwise, let's move on. So, okay, so similarly for Nasdaq, it's a little bounce. But like what I mentioned, Nasdaq is a little bit extended from this 20 exponential moving average. So I will wait for some sort of touching at the 20 exponential moving average before adding any new position, be it for trading or even for investment. But yeah, market structure remains intact with a higher low and higher high. All right, and let's move on to the next one. ASHR. Okay, so ASHR, what you get here is like some sort like some people could call it ascending triangle, but to me it looks more like what do you call it, a rising bearish wedge. Yeah, that's the pattern, the rising bearish wedge. Yeah, so basically what it gets is basically it gets prices get in an exceptionally high level. So basically you get here high, higher high, and even here a little higher high, which you can see is at 34.97, well previously it was 34.94. So even though all this is forming higher highs and higher lows, but it goes to such a point whereby the demand of the stocks actually run out. So basically, if the reason for this kind of rising wedge pattern is a lot of times as a result of a lack of supply of the stock. So basically, that leads to the rise of it. Okay, so basically, tendency for it to happen is it can continue straight up, or it can be cleanly rejected, whereby if it's cleanly rejected, then you will look to short. Or basically, in this case, I'll wait for retracement to add my position. But if you can break cleanly above, meaning to say you can have a single day whereby it forms a higher high, then I will actually decide to add one position if it's for trading in the long term position. Let's say, for example, if I'm looking to invest, then there could be another place whereby I add my investment as well. So yeah, that's part of the dollar cost averaging approach. All right, so it's still getting bullish market structure, bullish trend. In terms of the strength of the trend, you get 50, 150, and 200. So you get a very strong trend as well. All right, moving on to the next one, which is KWEB. Okay, so for KWEB, similarly like Nasdaq, it retraces a little bit more. So in this case, you got a high, a higher high, a low, not yet lower low yet. This could form definitely close lower today, then you get a lower low. But otherwise, you could actually bounce up to form a higher low. So as of right now, you still get a high, a higher high, a low, and a higher low. So bullish market structure remains intact. Bullish trend as well remains intact. and trend remains very strong. You get these 50, 150, and 200. And to top that off is actually expanding in terms of the gap. So yeah, it's looking really strong right now. So I wouldn't look to be adding any position in terms of investment, but if it does retraces to this 20 exponential moving average, I will look to add for dollar cost averaging for this period of time. All right, moving on, let's move to the next one. All right, so for Bitcoin itself, on the daily chart, what you see over here is that it forms a small little here. So if you see here is a high, a lower high, low, and a lower low. So this is 9238. This is 9233. Yep, so this is a lower low, this is a lower high. So market structure has transited from yesterday neutral to actually a bearish market structure, but trend remains bullish, and also the strength of the trend remains strong. So when such kind of thing happen, you will see that conflicting signal, which is like you get a bearish market structure but a bullish trend. So in this kind of scenario, when you're trading price action, I generally look for a fixed target approach rather than say a trailing target approach. So if I was looking for a short, which I've already entered, but we have yet to enter, what you have done is you would have actually I would have entered because that was based on the 4-hour chart. So let's go right into it first. All right, so as I was mentioning, why I entered a short setup yesterday, if you recall, is basically there was a clean rejection of this 200 simple moving average. So over here, this was the key candlestick to actually enter the short. Thereafter, I enter a short. This is where you'll be trailing, it's still going up. There's some sort of a potential reversal because you can see that it's been retested. First time, second time, third time. If it's actually retest for the fourth time, there is likelihood that it could break and go up above. In which case, if it does close above, I would suggest closing the trade at least 50% or even the full 100% of the trade itself. That is in terms of price action. So the reason why is because now you get the low. If you look in terms of the line wise, you get the low and a higher low. So the minute it breaks above, you get a high and a higher high. So there is a reversal in the potential of the trend to form the bullish market structure. All right. So in terms of current right now, the market structure you get is still high, a lower high. Yeah, you can look at here, then here will be the high, a higher high, but a low and a lower low. So I would still say it's rather in a neutral market structure. You don't get a clear market structure right now, unlike yesterday. Bearish in terms of the trend and normal in terms of the strength of the trend. So yep, this 50 actually crosses above, together with price crossing above, it will looks rather bullish, and I'll look to add position if I was looking to enter a long setup. So yeah, right now I've already entered this false breakout trade. So this false breakout trade remains valid for now. So the price breaks above the 200 SMA for our the short setup. Yeah. Otherwise, the target remains. Yeah. So basically, until price closes above, I would not close my short setup. And yeah, what you get right here is actually really what do you got? Like a consolidation pattern. You can see the volatility shrinking from this length to this length and now to this length. So it's very likely it's going to break either direction. You could actually retest here, clean rejection, and you lean to the downside. But if you have a clean break upside, I would say the next potential target you could hit could be 9,004 to even 9,000. Yeah, 9,004 to 9,450. This would be a range of target. So that was if you are looking to enter long. So if it has a clean break above, this could be a potential setup for price action as well. So yeah. But bear in mind that the reason why I wouldn't be taking this trade, let me just think about it. Okay, so the thought process is like this, if I were to say it out loud. Basically, the reason why I'm not looking to take this trade is because if you look at the daily chart, it could very much still break above here and still be in a range bound kind of situation on a daily chart. And basically I want it to break cleanly above this 9,003 in order to consider potential long. So yeah, if you look at this, then yes. And I could even though this is a high, this is a low high, this is a low, this is a low. So yeah, but that's it. Because this is a bearish market structure, I do lean towards the bearish side, especially trading on a 4-hour chart, because the tendency for it to continue in the terms of the bearish market structure is still there. So yeah, that is basically why I would avoid taking this trade. And because if you look at towards the upside, there is still this 50 simple moving average that could act as a potential resistant region. So yeah, that's the thought process. I would not consider taking that trade for now, unless I've noticed something different, be it like there's a stronger biasness towards the bullish side of things. But yeah, you can see that there's more test towards this downside, which is why I actually lean towards the bearish bias for now. There's a 1 test, 2 test, 3 test, and this is a lower high. So I do lean towards the potential test of here instead. But that's just my thought process. Otherwise, that's it for today, and I'll see you guys tomorrow. Take care. Bye-bye.